All right, traders, it is the 15th of July, 2017. My name is Jameson. We are getting a lot of questions on Gild Sciences. The ticker is GILD, and I can certainly see why. You know, we've recently broke the bearish descending channel, the supply line that's here. We have a broadening base. We can see that there's a selling climax, automatic reaction. This might be our secondary test here. We kind of break down, wash out lows, create a little spring, rally away with expanding volume. Demand overcomes supply. We re-achieve the 200-day simple moving average, and then we kind of create this little bull flag that's present. So certainly very attractive. Now, I think it might be a little early. That's why I've reserved my my opinion up until now. So some observations are is that we do see some gross participation off this base support. That is exactly what we want to see. We want to observe that supply is contracting, that there's less weak hands, there's no more sellers. We want to see that there's more buyers than there are sellers. We have that as it's present here. Now, what's very important here is we pull back. If you look at the pullback here, there's no sellers. Like, this really kind of confirms that we're in strong hands, and it's an attempt to confirm this prior level resistance as support. Now, here's the catch. We're attempting to regain present highs here, but it's with less participation, and we're trading the resistance. So at the present time, I'm reserved. I'm a little biased that we're going to see a breakdown, and then we'll see some gross buying on the 50-day simple moving average. So the theme here is that we're seeing some accumulation. There's still some manipulation going on. And the fact that supply is resolving, supply is contracting, demand is expanding, that would give me the confidence that if the opportunity presents and we close the gap, that we'll see some some greater buying here along the 100-day and 50-day simple moving average. So I'm a little bearish as we're trading into this prior level of support. We might be confirming it as resistance and then cause a breakdown, which I think we would buy here. Additionally, if we measure the amount of cost spent in the time spent in consolidation, that price target would give us a $70 price objective, which has been met. So that means that we have to build additional cause or spend some more time in consolidation before we can attempt to rally higher. Additionally, if I look at the performance of Gild compared to the market itself or to the index, I don't see any signs of relative strength yet. So we do have it here during this big breakout. But I'd want to see a little bit more relative strength here on highs to support my, a more immediate bullish bias as present. We can see the healthcare sector has been steadily outperforming. We're getting some participants, and we can see here that the biotech, the index itself, is starting to see some increased participation, and it's actually breaking resistance. So here's some nice relative strength. So my bias right now is that this is bullish. From a trading perspective, if you bought this, that's great. But if we don't trade higher, you got to stop out and just look for a lower entry here along the 50 and 100-day simple moving average, as it looks like it is under accumulation with bullish objectives of the $76 and $80 based on the amount of time spent in consolidation from here, where we're speculating that this is a selling climax. All right, traders, that's my opinion. Good luck.